Welcome to Pushing the Envelope, Canada's unfiltered voice in construction. Real conversations, smart insights from the people building our world. Brought to you by Bothwell Accurate.
So welcome back to Pushing the Envelope, the podcast where we sit down with those that are building our industry. I'm your host, Tanya Scapura, and today we're going to discuss where the market stands, where it's headed next, and what that means for the people building it. Over the past few years, we have lived through one of the most disruptive stretches in construction history, with COVID shock, tariffs, rate hikes, labor escalation, and DC challenges. All of these pressures have hit us at once. The impact's clear today. Condo launches have stalled. We've had disruptive residential projects across the GTA being paused and canceled, and performers are all being rewritten. So to unpack what that all means and what might come next, I'm here today joined by Michael Tamblyn from Torque and Mains. So Michael, thank you for joining us today. And before we begin, could you just give a brief introduction of Torque and Mains and what you do there?
Thank you, Tanya, for having me here. Happy to join you. I've been practicing construction law for about 40 years at Torque and Mains now, with a team of 7 other lawyers that do construction work with me. My client base is 24 high-rise condo developers and about 24 trades that build primarily a high-rise condo, some single-family residential, but primarily high-rise. And I have watched and have some anecdotes about what I've seen in the last few years that is troubling, but there's always opportunity whenever there's challenges in the marketplace.
Yep, that's well said. And you have so much experience dealing with this. I'm sure you've been very busy over the past few years, having all these answers for developers and different construction firms and things like that. So I know when we were emailing back and forth before, you mentioned a little bit about like COVID and the interest rates and how they've affected the market today. And if you were to rank, I guess, one of the biggest forces that have affected our condo market today, what would you say that is sort of between 2022 to now 2025?
I would say COVID, with the benefit of hindsight, was more of a blip. It was traumatic at the time, but it didn't disrupt the construction marketplace as much as people thought it did at the time. Interest rates definitely changed the landscape, certainly in condo high-rise development, construction, and sales, because it dried up the market for investors who were typically able to come in at the launch of a project and buy up at least half of the units in a building. And that allowed the developer to go get financing once they hit 65% sales. And with the higher interest rates, the developers were no longer able to put down 10 or 15% and then close and have the unit carry itself with the rent that they would charge to their tenant. They would need to put down something more like 50%, which they weren't willing to do. And most condo developers would have a pool of entrepreneurs who would buy, in the case of real estate agents, 2 or 3 units. And in the case of wealthy individuals, they would buy 20, 30, 40 units. And that gave the developers the momentum to get their financing and get the shovels in the ground. So with the interest rates changing and the investor market dried up, there was really no impetus for the developers to launch projects. So they have been waiting since 2022, really, when interest rates started to go up, for interest rates to come back down again. And even though they're down now, and you'd think at a level where investors might come back, because of the tariffs, there's market destabilization again, and that has kept the developers in the sidelines. So some of the less well-financed developers are having to give up properties because they can't launch. The pro formas are underwater. It would be not cost economic to build. So they are waiting on the sidelines. The equity in the projects is evaporating, and sometimes they're handing properties back that they have decided not to close on, not to proceed with. So with interest rates nearing the levels where the markets should be active again, we're not there yet, which I attribute to tariffs. And one of the ripple effects of investors stepping away from the market is that the investor buyer would want a unit that was 500 square feet to 700 square feet in size, which is perfect for renting out. But if you're talking about owner occupants who are going to live in the unit, raise a family there, and look at it as a long-term real estate investment, they want a bigger unit. So that works against the market because bigger units are more expensive. And if the developer has to, reshape the building footprint of each floor plate to have larger units at a higher price point, with the cost of land not really going down much yet, the cost of construction not really going down, and development charges going up. It was a perfect storm of market forces working against the launch of new projects.
Yes, we've been seeing it, and even just like projects that were in pre-con, like those are all canceled now, or they're just, the pre-con period's been very extended because everyone's doing value engineering and rewriting the pro forma, like you just said, and it's been such a trickle effect. And then now, I guess finally we're starting to see them actually canceled. I know one down the road was recently officially canceled that everyone had spent so much time budgeting and redoing multiple times. So it's really interesting to see. And it is, as you said, I guess it starts with the investors. They're not investing anymore. The developers can't get funding, and then it goes from there. So it's a vicious cycle.
Yeah, and it will be interesting to see where it goes. The units that will come back on the market because of defaulting purchasers, and there will be thousands of those as those condo projects are being finished this year, and the developers ask the unit buyers to close. A unit that they paid $1,500, $1,600, $1,700 a square foot for is now worth $1,200 a square foot or $900 a square foot, and they're simply walking away from the deals, losing their deposit, and risk getting sued. So that's going to be a very active litigation marketplace, and those thousands of units will be back on the market. Some people have estimated that as high as 5,000 to 6,000 units that will come back on the market. They will need to be absorbed by the marketplace before developers will launch new projects. So the developers that I have talked to do not see 2026 as a year when they're going to launch projects.
Okay.
The pro formas still don't work. And the pivot for them, the two obvious ones would be residential, go high-rise residential rental. And they can take their piece of land and, assuming it's in the right geographical location, turn it into a residential building. But the margins are smaller. There's already pros in that marketplace, like a Fitzrovia, who that's what they do. So it's a competitive environment. It will be saturated at some point. And if you don't know that space already, it's a risky learning curve. So smaller margins, I think it's a natural to think that way. And developers are running a pro forma to say, I'll turn my condo project into rental. But not that many are actually pulling the trigger on doing that. The other one is retirement communities. There's a tremendous need for that, better margins in that. And I have seen some developers moving into retirement communities as a way to take properties that they need to develop, and they're recasting them as a retirement community, either on their own, getting into that market space, or in partnership with an existing retirement community operator.
Yes, that we've noticed that too. A lot of more like long-term care residents coming up, and that's quite a difference though in the building itself and the layout of the building. So are they sort of needing to start from scratch when they're deciding to switch over, or?
Essentially, yes.
Okay.
Yeah, completely, especially with the retirement communities. There are a lot of upscale rental buildings that are near condo level of amenities, but a retirement community needs different amenities in different places within the building, and different sizing in the units, and the care aspect of those facilities are significant. So they've got to be accommodated, meaning fresh start, often with a fresh architect, and a different look at what they're building.
Yeah, I guess it would be very different, and even like very accessible too, right? Like more accessible than your standard building would need to be.
Yes, absolutely.
Yeah.
Everywhere.
Yeah. And then are we seeing more like government funding for those types of projects now? So people lean towards that, or is it just sort of at their own cost needing to do these conversions?
It would be at their own cost, and you raise a good point. Where's the government in all this? And when I say that, I look at all levels of the government, And if you remember back in the 70s, there were MURBs, which is a tax incentive for individuals to invest in a real estate project, get an immediate tax write-off of their investment, which provided funding for development and even large scale developments, not just townhouse developments, and that made financing accessible for developers. It was attractive for individuals who got the tax write-off, and if the project ended up being profitable, then that was a bonus on the back end for the investor. I know Benjamin Tal from the CIBC has suggested that. Josh Sagdansky from Madison, I view him as a visionary strategist and where to take your company in tough times. And that's something that he's suggesting to the federal government, dropping HST on condo sales. At a provincial level, it is taking 24 months to go through a rezoning process. In other jurisdictions, it's 6 months. So if they can streamline at a provincial level and reduce any tax burden on condo purchases, that will help. And most importantly, at a municipal level, the development charges now represent over 30% of the price of a condo. And that money is not being utilized to build infrastructure, which it ought to be. That was the whole purpose of it. And also demanding parkland as a contribution or cash instead, which they actually like better than the parkland. And that money is just sitting there. They're not using it to build infrastructure. And it seems like a waste to be charging those monies, putting the cost of a condo out of reach to the person who's a new home buyer, and escalating the cost of a condominium unit beyond the reach of many people. Some municipalities, I think the city of Mississauga was at the forefront of that, have said we will waive some of the development charges. We will defer some of them. I think there's some municipalities that are willing to waive them completely, which is, I think, the direction municipalities have to go. So if each level of government becomes part of the solution rather than part of the problem, they all stamp their foot and say we need 80,000 new units in Canada a year and 40,000 of those in Ontario. The market can build it, but they're not incented to do that because it's not cost economic to build those projects.
Exactly. And when you said they're switching from condos to rentals, do you think the government should sort of be dictating how many new builds should be rentals versus just condos at this time, so there's not a surge and the rental market doesn't get saturated? Or
It raises an interesting question about do you believe that government intervention is a good thing? And personally, I don't. I think if they stayed out of it, they have talked about becoming developers themselves, which means they're not actually going to be hiring. And it's the last thing you want them doing is getting in the marketplace. It's never worked out well for them to become business operators and owners. They would be partnering with developers who are looking for an opportunity to feed at the government trough, and that's not healthy for the marketplace. If they were to provide incentives, they don't need to fund or subsidize. It just means providing tax incentives for people, and then they can stay out of the way and let the free market stabilize itself at whatever level will support new projects being built.
Okay, so the biggest thing they could do is not get too involved, but just help with funding and let the developers do what they do best.
Yeah, reduce taxes, which is what they do, what they're least good at.
Yeah.
And let the developers do their thing.
Yeah, that makes total sense to me. I remember seeing the announcement of how they wanted to start a whole new development department within the government, and there was a lot of pushback on LinkedIn and some angry people commenting that are very high up in this industry. So it was interesting to see.
Yeah, and I don't blame the developers. The last thing they want to do is have a government which is charging them, taxes which they think are excessive, going into competition with them.
Becoming a competitor, yeah.
It's not it's not what the government should be doing. They're not developers and never will be. So create a platform or environment or a field for the developers to compete on against each other, but where it makes sense for them to be building buildings that people can live in, and then they get the housing units they want. The developers get to make a fair profit. The margins in the industry have progressively gone down over the last 30 years, so it's not the bonanza it might have been 20 or 30 years ago. But if they're profit motivated, they're private enterprise, and they're not going to build a building unless they're going to make money and the risk is manageable.
I'm just going to jump to sort of what you were mentioning about like HST and tax relief. Basically, in terms of that, DC and even the DC freezes in some cases, do you think these are actually going to move projects from paper to shovel? And like, how long do you think it will take? I know you said probably not 2026 or even 2027, but do you have an idea?
I think the reaction of private enterprise will be very quick. The developers are waiting for a signal to mobilize their projects, and they don't want to be the last to the market. So, how quickly can the government introduce legislation or change in protocols or their practice and procedure, whether it's taxation or zoning process or development charges? How quickly can those levels of government mobilize to make change? If they can do that in a matter of weeks or months, because the country is in a housing crisis. If they continue to keep the borders open for immigration, the problem will get worse. And I am a fan of immigration. I think it's healthy for the country and the diversity of our culture. But it is creating a bigger and bigger problem the more people they let in, because there aren't housing units for them. So if they can taper off immigration until the housing units that are being built are enough to house the people that are here and help them become affordable, which provides, by providing reasonable financing through tax incentives, streamlining the zoning means that if you can rezone in 6 months, then you don't have the carrying cost of the land you bought for an extra year and a half. Mm-hmm. And removing 30% or at least a big chunk of that cost of a condominium unit by eliminating development charges or bringing them back down to a level that is negligible. If they just spent the next 2 or 3 years using the money from the development charges that they have already accumulated mm-hmm. to build infrastructure and fund whatever other government programs they've been using that money for, then the developers would be back in with a vengeance and very quickly. I would measure that in weeks, not months or years.
Wow. So right now, are you like encouraging your clients or partners to sort of just sit tight and wait to see if these government changes happen while maybe remodeling their performers on the side? Or what is like your biggest piece of advice to people sort of just sitting on these places that aren't generating any like rental income or anything right now?
Based on my take that the issue is mostly impediments imposed by federal, provincial, and municipal government, my suggestion has been lobby at every level of government, get the ear of Prime Minister Carney, Doug Ford, and Premier Ford, and Olivia Chow at the municipal level in Toronto, and let them know that there is no way you're going to be building or able to build if it's not cost economic, and let them know what you need from them. And I know Build, the industry group, Build, has been lobbying the government at provincial and federal levels. And if they have more support from the trades, because we haven't really talked about trades yet and yes. how that impacts them, and trade industry associations saying, we want to get back to work, we want to build the housing units that we want, we have to do this together and we need your help. Like lower the taxation levels at every level of government on the condominium industry, and you will get your housing units.
So the most realistic lever they could pull right now is just speaking up, lobbying, and getting their voices out there as much as possible. Like I know the owner of Bothwell has been doing it a lot, just speaking out and trying to get in front of the people that can actually make these changes happen so our industry can continue to thrive. And yeah, I guess going into trades, sub-trades, what do you think we can do to help the situation right now or make things better, easier on developers and our general contractors that we deal with on a day-to-day basis? Because we're sitting on a lot of jobs too that we priced maybe 3 years ago, and we've priced them 2 more times since then because they keep changing.
Yeah, I mean, I think the unions have an interesting role to play here. I would have expected this year, with the industry slowdown, they would have moderated their demands for increase in hourly rates, but it was the opposite. They're looking for more money. And the marketplace simply isn't going to support even the rates that are being charged now, because developers need to be able to build cheaper. So if those union laborers don't have work, the best of them, the ones with entrepreneurial spirit, will go become self-employed, and they will, whether they're electrician, plumber, drywall, whatever, they will start, their own business. And I think many of them will find that they can make the same money or more likely, as self-employed. And you're losing the labor force that is so critical. And that is one of the elements of how many units can you build in Ontario in a year. They need skilled trades. They're not coming in through immigration. If Immigration Canada read the tea leaves, they would see that we need more skilled trades and bring them in from Europe and Mexico and other parts of the world, that they're there, they would like to come here, but that's not who is being let in primarily. And if we lose part of our labor force, the best skilled tradesmen, to them becoming self-employed because they had to survive, I don't think they're coming back. So your labor force will be evaporating the longer this goes, before I think the government steps in and fixes this by lowering taxes at every level. We can't afford to lose skilled tradesmen. They need to be
No.
working.
I agree. It's already like scarce, and the predictions for the future aren't the best for skilled trades, right? So if everyone starts sort of leaving the unions and starting their own things, like you said, it could end up having very negative long-term effects on the industry.
Right. And you did ask a question I haven't answered yet, and that was about what are developers doing. Modular building is becoming very popular, and we see that both in precast. They're precasting columns, slabs, for mid-rise and even high-rise, building modular units of single-family dwellings, stacked townhouses, and even for condominium units, they're looking at that, the impact of AI. There are the biggest contractors and the best and the brightest and builders are well down the path of how can we use AI to minimize our construction costs. And they're moving out of the GTA, so they can do a 40 stacked townhouse unit outside of the GTA. Land cost is reasonable. It's more better able to accommodate modular construction. Even built off site, and they can sell those. They can bring it in at a price within a community that doesn't have the development charges, with a labor force that need work outside of Toronto. And there's an appetite for being able to buy a townhouse for under $1 million or $600,000 or $700,000, and it's possible outside of the GTA still. For the small to medium-sized developers, that is a pivot they can make. For a large-scale developer, their staff, their infrastructure aren't well suited to being able to make that kind of a pivot. So they're more retirement community, rental, or try and reinvent themselves and go out and build for somebody else. So companies that were doing their own construction are now looking at taking their construction management team and making them available to other companies that are building and saying, we've got a great team, we want to keep them, we'll build your project for you.
Yes, I've been seeing that happening. People that used to develop and build their own projects, now they're not developing anymore. They're working for developers building their projects just to do exactly as you said.
Yeah.
So it's interesting. And when you say going outside of the GTA, is that still staying in Ontario? Because I know you mentioned it's sort of a provincial thing that we need to fix, that needs to trickle down from there. Are people actually going outside of Ontario and putting their resources out there? Or do you still mean within, just in like the outskirts, sort of?
Outside the GTA, 90% of my work is within Ontario, but I do have some national clients who are building their business and moving into, for construction managers, they're moving into commercial projects, infrastructure projects, which are risky,
Yes.
but looking at commercial, even industrial, and looking outside our borders to build a national footprint when they've been regional only until now.
Yeah, that makes sense. And I know a lot of general contractors that we meet with and speak to on a day-to-day basis, the ones that were specifically like residential condos are now shifting to get into industrial projects, institutional projects, more City of Toronto projects that they would have never touched. And now the general contractors that were doing that and were specializing in that are sort of having an issue because they have new competitors they have never had before, and it's just such a trickle down effect. And yeah, it's affecting everyone. And I really hope, yes, the government can intervene. And like you said, the unions are going to be so important in this to sort of help us level back out and not have everyone leave Toronto, right? We need to continue building here because then we're going to end up with a shortage if we don't.
If everybody does their part, unions moderate their demands and accept the reality of the current marketplace, land prices come down so that people are trying to sell land, understand that the market's changed. The price you could have sold for 3 years ago is no longer available and won't be for the next 5 years. Then sell a property at what it's worth today. Trades will need to moderate their profit margins, their pricing, to make it cost economic for developers to work. If developers become more efficient or find a cheaper way to build, and the government, most importantly, if everybody does their part, we can get back to building in 2026. But it's going to take everybody to do their part to make that happen.
Well, and I think everyone's on board. So hopefully we just keep rooting for it and lobbying and doing what we can, doing things like this, just having podcasts and speaking out and getting our voices out there because it's so important. And I know we're probably almost out of time and we've touched on almost everything, but do you have any opinion on office space coming back right now? I hear from some people that they think it's going to start coming back, and some people were going to start converting and now they're not going to convert office to condo. They want to sort of keep it. And they really believe that everyone's going back to work, and then that'll start back up in Toronto very soon.
I don't see it. They've been saying that for 2 years, and banks and insurance companies, some of the biggest organizations have mandated it. First 3 days a week, now 4 days a week, some even 5 days a week. But there is tremendous resistance to that, and people in their 20s, 30s, 40s do not want to come back to work, and that ties into developers moving outside the GTA and building housing product that has more space, 1,000, 1,500 square feet or 2,000 square feet. So someone can buy outside of the GTA, work from home, because that changed the marketplace forever. When people started working from home during COVID, they didn't want to come back. And we find that we have 120 lawyers, 250 people total, and there is resistance. And it's well-intentioned. People believe, many of our lawyers believe they can be more efficient working at home, gives them a chance to have better lifestyle balance, take their kids to school or whatever their domestic priorities and obligations are.
Of course,
they're
yeah.
better able to meet them. And I don't see it changing. If I talk to commercial real estate brokers downtown, which I do regularly, they see most people are downsizing into less space, going from 5 floors to 3 floors in a large business.
Okay.
We're downsizing ourselves to recognize the fact that we don't have as many lawyers in the office on a regular basis. So we'll move to shared offices, hoteling, and that sort of thing. And the accounting firms have been 10 years ahead of us in doing that. So even partners don't have a dedicated office. They will sign into an office or book an office, and it's a different office every day. So coming back downtown, I don't see it. I think there's going to be as much working from home now as there will be in 2 years or 5 years. People were spoiled by that, and they don't want to give it up. And employers, if you have a valuable employee, you don't want to blow up the relationship over that issue. If they're productive, engaged, and contributing in some way to the culture or in a couple of days a week, that needs to be enough, and we're all adapting our cultures to living with that new normal.
Yeah, that I think you make a really good point. So I know people have been saying it for years, and I guess in your opinion, it's more just wishful thinking at this point.
I think so.
Yeah, that's good. I agree because I haven't seen it. I just hear about it all the time. So it's an interesting way to put it. Is there anything else you'd like to bring up, or any final thoughts you want to leave with the industry while we still have you here?
I'm excited about the future of the construction industry and have loved working as a cog in that wheel for the last 40 years, and really am hopeful about the future, and I believe it's possible. And I think if we all work towards that common goal of building buildings again, that we'll get it done. Canadians are resourceful, strong people who believe in their country and support their communities. And I think if we have leaders at the federal, provincial, municipal level who rally us and gather consensus, that we can make it happen.
Perfect. That's very refreshing to hear. It's kind of getting old, all the panels with the doom and gloom and the cities falling. I do believe there are opportunities under all of this, and this is giving people the chance to sort of slow down and take a look at everything that's going on and unite a lot more.
Well, thank you to you and Bothwell Accurate for having me here. I've really enjoyed our chat.
Yes, thank you for joining us.